Thank you, Sonia. It's a pleasure to be here with all of you. And as Sonia said, please do share questions and insights throughout the presentation or afterwards as well, because I'll try to be brief and stick to the 20 minutes that I've got, which is quite hard with integrating ESG into corporate strategy, to be honest. But I'll be happy to share insights with all of you and answer your questions at the end. So we can kick off, as she said very well. So my name is Maribel. Some of you would know me from sustainability in the hospitality industry, and I do research, training, and in academia. I teach in universities, in private and public universities in Europe. And I'm also cooperating at the government level as well to develop strategies for destinations and working with assets most of the time in Portugal, Spain, Greece, well, Southern European countries. So it's a pleasure to share these insights with you. And where are we at? And before I started the webinar, I wanted to put us in situations. So what's happening and having this holistic view of why even we're talking about ESG and sustainability now, to integrate it in corporate strategy, and what are the risks or what are the risks and the opportunities for us, but most and foremost is what are the risks of not taking action, especially if we are not adapting the business models that we have in asset management, in regardless of your asset type, if we are not integrating ESG factors into decision making, into strategy developing, mapping the risk in the supply chain. If we don't do that, we are facing a risk for compliance, losing clients, and cascade down to all the different risks and into the organization. So it's crucial that we integrate ESG aspects or sustainability, a full sustainability strategy in the company, because otherwise we are developing products and services that eventually will be disrupted either by regulation or by climate risks, or just because our client won't necessarily choose us anymore. It doesn't matter, we are in a commercial real estate, we are talking about residential, we are talking about hotels, we are talking about different type of assets. At the end of the day, is the usage of the building, and that usage of the building has to be linked to well-being, to sustainability, to creating positive and impactful strategies that benefit all. So we have a benefit that's shared. So we will just go through some regulations at the end and some examples of how we can actually integrate it with technology and other tools. But let's start with how we from where we start or not, right? So if we were to start today integrating ESG into corporate strategy and we have no idea where to start, first of all, we need to do an assessment of our materiality. It means how we as our company, how we are impacting the ecosystem where we have the company operations, whether it's in a country or multiple countries, multiple destinations, how we are impacting with our activity, and how our activity will be impacted by those risks. So we need to start collecting non-financial data. So what is non-financial data? Non-financial data is all the operational information that is from the different departments that gives you an indication of how you're performing in terms of social well-being, of cultural, the culture of the company, the internal well-being, the diversity and inclusion, that the practices that you have regarding diversity in your company, everything related to opportunity and education. So all that is not relating only with the financial performance, even though we will see that environmental and social data also is linked to financial data, because if we don't take action, you have risks, financial risk associated. So like climate related risks that will affect, like for instance, a property valuation, and thus can make us lose revenue. So we will start here. We will start collecting non-financial data from the different departments, from the different operations at the different destinations, if we were to have a multiple country or multiple destination business. And once we have that, we have to assess and benchmark. So we will see some examples of benchmarking companies that we can do and we can use, and benchmark how is our company performing in regards to competitors, industry peers, and cross-sector as well in other industries. Another thing I've mentioned here is the nature-related risk and opportunities, because of course, being buildings, we are dependent on nature. We are dependent on local ecosystems, on biodiversity protection, and if we don't account for those risks in the different scenarios, whether it's short-term, medium-term, and long-term, with the different scientific models, if we don't make that calculation, if we don't account that into the strategy, we might lose and we might lose the license to operate in some destinations, or even we have stranded assets. For those of you that are not familiar with stranded assets, are those assets that are we cannot get revenue from them because they are either run by or they have a high emissions, CO2 emissions, or because we can just not or the valuation of the property cannot be the same because it's being used in a manner that's disturbing or is polluting, and thus it has higher insurance fees and, well, some of the things that we will see. But anything related to nature related risk, we have to account, and we have to start measuring and accounting and having data from the different sites. Also from human related risk and opportunities as well, whether it's workforce, talent management, technology implementation to retain and attract talent, how is the human related risk on site and on property. So we will see that. And last but not least, the business model, how it has to evolve the real estate sector as a business model, so we can bring value to the different stakeholders over time, and how that will bring us revenue or financial income and revenue streams in the next years, if we are depending on, again, climate risk, if we are depending on social stability. So especially in the commercial real estate, we're at the mercy of those specific characteristics. So some of the issues we have to start accounting, we will call it double or triple materiality. So if you are based in Europe, for those of you on the webinar today, you know that we have the Corporate Sustainability Reporting Directive that we will see, if I'm correct, next week, about the regulation, the webinar we have next week. So once we have we deep dive into regulations, we can see more. But today, before we go to the regulations, today we are discussing integrating it into our strategy. We can already integrate the materiality without necessarily looking for compliance. So what it means, double materiality? It means that as a company, as I said at the beginning, we have two impacts. We have an impact inside out, so we have an impact in the society, we have an impact outside the business, but also what is happening in society, what's happening in nature is also can affect us and will disrupt the revenue making. So it's a both ways. Is how is my impact and how the outside impacts me. It's not only about risk assessment, which will be a reactive approach, but rather having a proactive approach, meaning how do I manage my business so I can tackle those impacts I'm having externally. Until now, when we did the materiality matrix for sustainability assessment, it was most of the time reactive. So how these issues, let's say water scarcity, workforce, retention problems, etc., how all those issues will affect me and the revenue, the bottom line, or how all of this will affect us, what is the risk level, right? We will put that into a matrix, and then we will say, okay, we will prioritize issues. We've done this until now, very much driven by the GRI, the Global Reporting Initiative. However, with this regulation and how things are evolving, is completely not opposite, but it's different, the approach. Here, the mindset for the business is how do we change the business model, how we do change the things we do in operations, in development, with contractors, etc. So we have a positive impact in different stakeholders, and that's called double materiality. Is what is the financial impact of not taking action? For instance, before, stranded assets, losing license to operate, high insurance fees, etc. All those issues will affect me directly as a business. So it might disrupt my activity, and thus the revenue will be impacted. So the only way to be in the good side of the story is being proactive and taking action. This regulation pushes to do so in some characteristics, not all of them. For instance, climate risks, emissions, things we already know are already material and are for all industries and are mandatory. But some others, such as social issues, are not necessarily mandatory. So here it's in your will and to do things differently and to add value in this business model of real estate and asset management in a different manner. And we will see one of the greatest example. I put it at the end of the presentation. So in that case, that the specific regulation we were seeing, I was mentioning, is only applicable for businesses in Europe that are with balance sheet with more than 20 million net revenue, 40 million or 2050 plus employees. But we will see this into details in the next webinar. So what are the disclosure requirements? Disclosure requirements are those data points or data we need from our operations to disclose that is not related to income, expenses, import, export, so nothing related with the financial P&L that we've seen and that we've used in the industry. So disclosure requirements means sharing information that is related to our operations and our suppliers' data. For instance, how much is our supplier does our supplier comply with living wage to their employees? So that information we need to gather for all of our suppliers. We also need data about the training in our companies, research and development. What materials do we use and how those materials comply with local regulations, but also how the materials affect to the local ecosystem services. So here we see some examples of data or disclosure requirements that we need that are required, just not from this regulation. We also have seen data needed from international frameworks being developed, such as TCFD, that I'm sure some of you might know it. TCFD is related to the risk management of the company and how that we can integrate the risk management framework. So we integrate into the strategy policies that lead us to take action and is control, especially when we are talking about investor relations. The CFD is one of the most required frameworks to be added or embedded in the strategy. I think someone has a question, something, but we will mention it. We can go to it, or we can answer it at the end. As an example, I've mentioned, I wanted to share here with you the FF&E or the furniture fixtures of the building. This is a very specific example in real estate, right? So as we are operating and as we are developing, and there's construction site, there's contractors, there are so many stakeholders. I wanted to have an example with one specific part of it, which is the furniture. So in any building, in any given building, we will need FF&E, we will need furniture, we will need fixtures. So how we can integrate ESG into that? So from the procurement process, meaning where do we buy, how do we buy it, and why, to what's the compliance around. If we are in Europe, then we will see we have Circular Economy Action Plan that leads to Sustainable Products Initiative. So we have to be aware of those regulations. We need to understand if our FF&E products are supporting deforestation, are bought in a different country and it had a lot, let's say, emissions. We are not integrating the embodied emissions or the traveling emissions. Are we supporting a local community, a local artist when we are developing these projects? When the FF&E life cycle, do we analyze the FF&E life cycle, and do we have a ready strategy for once the life cycle is ended, or we can no longer use it for damage, usage, etc.? What is the end of this FF&E? Is all of the different aspects that we have to already we need to already include them in our strategy before we make a purchase, or if it's an operating asset when we are renovating. So as I said here, this example is very specific for FF&E, could be any other area of the building. But here, just with that, we need to account different regulations. What's the non-financial reporting related to the FF&E, to the furniture? Here we will have everything related to the emissions of the furniture, to the impact on local communities, to the well-being, to the well-being to the tenant. We also will see the circularity of the products, the materials being used to create the products. Everything has to be informed and disclosed. And that's why I believe that we are going into those details when we are talking about corporate strategy, because it's quite complex and we have to have this big picture and all the data from the different aspects of whether it's purchasing, supply chain management, etc. So as I was saying, here's just some examples. So what is the waste, the circularity, material rate that we're using? What are the resources being used to extract those materials? Are we using virgin materials? How are we measuring it? What technology we're using to measure this FF&E impact? Because there is a lot of technology nowadays that you can use blockchain to trace the materials. Are we integrating this? Is worth it to make the investment? Those little decisions are things that we have to incorporate in a daily practice when we are doing the business strategy. So here, as I said, I put in some example of packaging efficiency, especially new openings and new sites. How are we calculating embodied emissions, which tends to be scope 3 emissions and is not all the time in the scope, or is not in the regulatory, it's not mandatory by the regulations. So again, it's very much that. So moving forward, how do we manage those businesses in a way that are compliant with ESG? So we have to understand local impacts. Let me move us because I'm just seeing Sonia and me here on the left. So all these impacts is from the water management in the building to the technologies we use, to the risk of the biodiversity impact we have on local sites. All those areas have to be included in the corporate strategy. Again, it will differ if it's a new building or a developing one. We will see now how is the difference. Here are some of the entities that I would recommend if we were to start the strategy, whether it's CDP or the GRI to start reporting, having certifications such as BREEAM for the building, it can be helpful. The GRESB for real estate is amazing as well in terms of the benchmarking. So you have a great benchmarking against peers in the industry. And true cost or PRI will be more for the investment or the asset management perspective, but great tool to have data. And also EMAS for the certification. Just here, Natural Conservancy, etc. So some examples of institutions that are developing great standards, but BREEAM and GRESB will be the two perhaps the most useful for the audience today. And if I may finish with this, because I don't want to overextend myself. I think this is quite interesting. How we can, I want to move us here, but it doesn't allow me to move. Okay, now. If we want to integrate ESG into the building, here there's two examples of a new building and an existing property. So for a new building, what we want to do from land acquisition to architecture, interior design, procurement, and fit out, all the life cycle, we have to understand that ESG data applies to every single stage of the development, and it's not only related to environmental data, which sometimes we have been assuming or focusing our attention just on the climate risk of the destination, or just getting again emissions or chemicals usage. So things that with water management, waste management, which is most of the basics. So that data is important, but there are some other things that we have to take into consideration that has to be context-based. So if we have a multi-site business, it's also important that we have the local context into consideration when we are gathering data, whether you're using a software or you're using still Excel. you need that context based, and you need to understand the thresholds. So for instance, if I am developing a new property, we need to understand in that specific destination, let's say London, the percentage of raw materials available that we will be using. So we need that percentage, we need that data. This will be part of the R&D that we need. So that R&D team or the research team, we still need information in order for us to build meaningful KPIs, because we can measure something, but it has to have a context, because we can have a number, let's say 200 liters per day per usage, per room or per stay, but then we need what's the percentage of water availability for locals. So this is what the information we need. Is an example with water, but can be with any different F&B. Let's say if we have any F&B point, or if we have any service. So any service or any selling point that we have in the building, it has to be measured with the local context data. And then as well, the ESG data has to be monitored throughout. So the use of technology will allow us to do so. And that data we need to gather from the different stakeholders. So let's say we can use, for instance, one-click LCA. So with that technology, you can have emissions data, you can also have biodiversity protection data, and you can monitor that throughout the project. And for existing assets, is more difficult because we have sometimes the resistance from the people working on the assets, right? So what is critical is that whether it's contractors or the asset management, the owners, we work together to get the different ESG related data, whether it's human rights related, how is the impact of the building, how are we protecting do we have contingency plans for climate related risks? What is the building management system like? All this information needs to be together, so we get that sustainability strategy right with the real data at real time, if it's possible. So I don't want to overextend. As I said, I just wanted to share one example of a great company, I think, is in the Socios. The developer of mixed-use places, and they practices, whether it's social practices or environmental practices, are always a great example. They design with the thinking of that well-being, and it's just not the use of materials, but also the policies they have. Let's say they don't develop, so they prioritize retrofitting always. The social practices they have, I do encourage and recommend you to have a look to them, because it's a great type of, developer and business practice in general. It's a great company to look and deep dive into it.